Jerome Powell, the chairman of the Federal Reserve, spoke yesterday, March 22nd. Here's what he said in a condensed version. I'm going to translate it for you, so kick back, grab a cold one, and enjoy.
Before discussing today's meeting, let me briefly address recent developments in the banking sector.
Before we even begin to talk about rate hikes today, let's talk about the bank collapses that happened in the last weeks. Maybe we had a little bit to do with it.
Our banking system is sound and resilient, with strong capital and liquidity.
Okay, good to hear. Good to know.
We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools, as needed, to keep it safe and sound.
That wasn't so reassuring. If the banking system's good, why are we still having to monitor it and keep a close eye on it? I'm going to take a question near the end of the video where they had Q&A at the end that I found was quite interesting and relevant to this.
I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
You know, it's too early to say, really, whether...
The likelihood of a recession has greatly increased. This is what he's indicating here, although he did say there may be a chance. And the really proof in the pudding of that is he points to how long it might take to get over the banking crisis. In other words, he expects maybe there's more to come yet.
Inflation remains too high, and the labor market continues to be very tight. At today's meeting, the committee raised the target range for the federal funds rate by a 0.25 percentage point.
Inflation came in too hot in January, so they upped the rate by 0.25%, again, quarter point, yesterday. And he gave us forward guidance for what's to come.
We no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation, that the appropriate level of the federal funds rate will be 5.1% at the end of this year.
During his talk, he was kind of vague about future rate hikes. He indicated it will go up from where it is today, but he doesn't know when that will be. He didn't want to commit to the next FOMC meeting, so we will see now. We may have reached a pause in the federal funds rate hike.
Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors? Thanks.
Well, I'm not saying anything more than I'm saying. So
what he's asking here is the banks that have failed are actually pretty large banks, and the ripple effect in the economy could really be terrible if the federal government didn't insure all the funds or all the deposits that were in those banks. So are they going to bail out the small banks? And really the answer here was just straight up no. Much like Janet Yellen was asked just a week ago whether they would bail out the banks, they get the same answer. They're not going to commit to it. And really, this points to the fact they don't want to encourage bad behavior in the banks. But if you have over $250,000, you're not insured. In a smaller bank, it may be at risk. For the average depositor, average person, that's not a big deal. FDIC does insure up to $250,000 in deposits.